And senior government officials in Hong Kong are facing a cut in pay, with the money going to charity and to top up the administration's cash reserves. Last week, Chief Executive Carrie Lam announced new stimulus worth almost $18 billion to support Hong Kong's slumping economy. The additional spending accounts for almost 10% of the city's GDP and almost doubles its projected budget deficit. And meanwhile, North Korea says it's ready to take more steps to guard against the coronavirus, but insists the situation remains stable. Kim Jong-un chaired a meeting of the ruling Politburo at the weekend, and state media says they agreed it is impossible to totally insulate the country from the infection. KCNA reveals the Politburo said the pandemic may create what it called, quote, obstacles to North Korea's progress. Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Heidi.
All right, Karina, thank you. Let's take a look at what is really a holiday quieten session on the markets. Of course, just to remind you that Australia, New Zealand and Hong Kong markets are closed for the Easter Monday holiday. Thailand also not trading today either. Let's take a look at what we are looking at. The Nikkei 225 resuming losses. We're seeing declines of about 1.3%. Fast retailing, of course, the clothes manufacturer and outlets among the biggest drags for the Uniqlo operator, cutting its outlook on the pandemic shutdown and the demise of really the global consumer. The Kospi, meanwhile, weighed down by chip makers on auto stocks. We had that decline of about 1.5% for chip exports in the first 10 days of the month. When it comes to trading in currencies, JPY ticking higher after last week's retreat. Liquidity pretty thin on the ground amid the Easter long weekend holiday. Volatility also easing by more than half from these recent highs as we get a bit of fatigue amongst market participants. US futures we've been looking at all morning have been turning lower at the start of the earnings season, and also, of course, on account of what we've seen in the oil markets, Jerry, which, of course, has been that initial bump, but very quickly investors in that space clearly agreeing with the likes of Goldman Sachs, saying that, you know, this is a historic, but still, at the end of the day, not enough of a deal.
Let's stay on oil, Heidi, and discuss the prospects for crude with Vanda Insights founder and CEO Vandana Hari. Vandana, great to have you with us on the line. So let's discuss what's happening with the price of oil at the moment, because it's been a bumpy ride in early trade. So what do you make of the price action so far?
Hi, good morning. So indeed, quite a volatile start to the trading session. I think the market has a lot to take in over what happened over the long weekend. And within that, a lot of details to digest, not the least of which is going to be the fact that the alliance was not able to grow itself, if you will. Countries like Canada, Norway, Brazil, and of course the US, which may have added to the cuts by mandating their own reduction, have not done so. They have at least pledged, or they have promised, but not exactly pledged. And the other one is, of course, Mexico, and the huge amount of time and negotiations it took to bring that country on board, which points to potential fault lines, which may, prove risky in going ahead.
At least for now, Vandana, though, the Saudi Arabian Energy Minister bin Salman saying that OPEC Plus is up and alive. Is that true? Is the price war over for now?
So is it up? Has it woken up? Probably. It was like dormant, or some people called it dead for the past 1 month. I guess, however, for the market, what will count really more than any words or reassurances from the ministers would be exactly what they do in May. Are they able to cut back by such a huge amount, 9.7 million barrels per day? It's not that you can just do it with the flick of the switch. I think the market will want to see some sort of reduction starting to happen this month itself to have credibility on the 9.7 million barrels per day cut from next month.
How fragile is it, really, given that this was really, a political price war that was looking for a political solution?
So all OPEC or OPEC plus cuts have always come with a shadow of doubt as to whether the members will comply, whether the agreement will stick. I think this one, because of the magnitude of the cut, unprecedented in the history of the oil world, and the fact that it took so long for Mexico to come on board and a huge compromise was reached. So basically, Mexico is cutting much less than its fair share. I think all of this puts a slightly bigger question mark on whether they are able to stick together in this one.
Given that US stockpiles are still so elevated, is there any choice for US shale other than to also cut?
So that's a good question. The 9.7 million barrels per day are mandated cuts. Put that to one side. We will for sure see organic, natural, market-driven cuts starting to happen, and some have already begun in places like Canada, especially, and US. I mean, look at how steeply the oil rig count has been dropping in the US for the past 4 to 5 weeks. The US has said that it expects anywhere from 1.6 to 2, even up to 3 million barrels per day drop in production through this year. That will happen. I think the concern for the oil market is going to be that those organic, natural cuts are going to be lagging severely the demand destruction that we're seeing right now.
So that 3.7 million promised by the U.S., Brazil, and Canada, are those then just idle production instead of real cuts?
Yeah, so what they're doing is they're not saying that we will mandate these kind of cuts. They have calculated what they expect to be a natural decline in their production as a result of pressure on the oil companies from the low oil prices.
How optimistic are you on the demand side of things, particularly as we look into what no doubt will be a horrible set of numbers out of China? But beyond that, is there some hope that we might see a quicker than expected, a more robust than expected recovery from China? And therefore, does that at all change, I guess, the expectations when it comes to the demand side?
So the ultimate savior for the low oil prices is going to be the pandemic tapering off and demand recovering. I think the past few days especially have proven to us that OPEC Plus can only do so much. They might be able to put a floor under prices now after their decision. But look, as far as the pandemic is concerned, it's very unpredictable. We've still not seen the peak in terms of cases and deaths and so on in the worst hit countries. I would think the second quarter of this year looks really difficult. Probably the worst demand destruction is going to happen through this quarter. Hopefully if the pandemic starts ebbing, we may see some sort of demand recovery happening in the third quarter, but I expect it to be very, very gradual.
And then just lastly, we heard from the International Energy Agency saying that they will update on Wednesday the numbers when it comes to plans from consumer nations on adding to their reserves. How much could just countries buying cheap crude help in offsetting some of the pressures when it comes to oil?
So, I won't bet too much on that. There are probably already plans afoot for China to buy, to stock up in commercial and strategic storage. India is looking to buy a little bit, but Indian strategic storage is way, way smaller than China's. And in this part of the world, you have Japan, Korea, Australia, New Zealand, which do maintain strategic storages in line with the IEA. Overall, perhaps all put together could buy a few tens of millions of barrels of oil. But, if you look at 25 to 30 million barrels per day, every single day of excess production right now, it's going to be a drop in the bucket.
All right, Vandana, thank you so much for joining us as always. Vandana Hari from Vanda Insights, the CEO there. Talking about that OPEC agreement, the reaction on oil markets, we are just getting the latest coronavirus case numbers out of China, crossing the Bloomberg. China saying that they've seen 108 additional coronavirus cases for April 12th, that 98 out of those 108 cases on April 12th are important cases. Also reporting 61 asymptomatic coronavirus cases for April 12th. And of course, in terms of those 98 out of 108 cases being imported, particularly pertinent given that we've seen increased restrictions on Harbin province, quarantine measures being taken after the country reported about 100 new cases that were imported from Russia. We have lots more to come on Daybreak Asia on what is a holiday-themed trading session this Easter Monday. We've got Australia, New Zealand, Hong Kong and Thailand markets are closed. This is Bloomberg.
Fuel, corn, livestock, precious metals. Commodities are everywhere, and so is Bloomberg. Bloomberg Commodity Indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
Like its peers around the world, the Federal Reserve is digging in for a long, drawn-out battle against the coronavirus, both in their willingness to take more action and their sense that it's a war that's far from being won. Our global economics and policy editor, Kathleen Hays, joins us now on the line. Kathleen, so let's start at the Fed. We heard from two FOMC voters. Who are they and what did they say?
Well, let's start with Neel Kashkari, president of the Federal Reserve Bank of Minneapolis, on one of the big Sunday news shows, Face the Nation, this morning. He's saying it's going to be a hard road ahead for the economy, for the country, for the world, until a vaccine, effective therapies are found. In fact, he says until that happens, we're going to keep seeing flare-ups, and he thinks that it's going to be like 18 months of these sort of flare-ups, volatility in the markets, and he's kind of echoing, I think, and responding to some concern over something that Anthony Fauci was talking about as well on CNN. He, of course, is the director of the National Institute of Allergy and Infectious Diseases. We hear about from him every day, saying that maybe the reopening could start in stages in May. That's controversial. We'll see what happens. Neel Kashkari basically saying, with all this in the background, he sure doesn't see a V-shaped recovery.
Yeah, and really increasingly a lot of concerns about even a U-shaped recovery, right, if it's a really elongated view there. Kathleen, we also heard from another FOMC voter who does not see that light at the end of the tunnel when it comes to the virus. What was it that Loretta Mester had to say?
Loretta Mester, yes, also voted president of Cleveland Fed, and I think she said that she's looking for some ugly data down the road. I think, like Neel Kashkari, it's not time to be looking for any kind of big rebound, even though the Fed Chair Jay Powell recently said he does think we'll see that rebound eventually. But importantly, she says the door is open, basically, to more emergency lending programs. Can you believe it? She says, directly quoting her at an event, I know at the Federal Reserve We're likely not close to really having it all done, but we're always looking for things to do, and if we think something is going to work, we're going to try it. We're going to do it if it's needed. So they, as I said, doors still open. They already have, look at this Bloomberg chart, and various programs in place, including repo operations that would have totaled about $2.3 trillion when they're all in place, along with the muni bond facility, money market funds, all kinds of things. She says she thinks the Fed is building a bridge to the recovery.
So what should we be watching out this week, just to see how badly that bridge that you just mentioned needs to be built?
Yeah. Well, I think for the U.S., it's pretty clear. Retail sales is going to be a big one for the month of March. It's supposed to be down about 8%. That's a pretty big drop. Industrial production, that's manufacturing, closely watched as well, looking for a loss of over 4%. I think this is one of the times it's going to be so interesting to watch with Facebook. Usually this is something, you look at it very quickly, it's anecdotal reports from the 12 Fed districts. Each Fed president and has this group put in their report. But this time, let's think about it. This is going to be taken over the last 4 to 6 weeks, coming in to just last week. We're going to be looking so closely, won't we, for anything people have to say about the impact of the virus, uncertainty, small businesses, what workers are saying, what experts are saying in their districts. So I think that's another one that we very, very closely watch.
Kathleen, thank you for that. Our Global Economics and Policy Editor, Kathleen Hayes there. All right, well, coming up next on Daybreak Asia, China's massively opened up its credit tap. We'll assess how it's likely to affect market sentiment today. This is Bloomberg.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Let's get a quick check of the latest business flash headlines. The Australian newspaper says Woodside Petroleum has ruled out an approach for rival Oil Search. The paper cites an interview with CEO Peter Coleman, who says the opportunity has passed. Oil Search rejected an approach from Woodside in 2015. Coleman's quoted as saying he hopes other opportunities will open up. Oil Search shares have slumped more than 60% this year. Reports from the U.S. say Disney World is laying off 43,000 workers because of the coronavirus fallout. The park closed its doors last month due to social distancing measures, and the company is now being forced to furlough staff. The layoffs will begin next weekend and come after an agreement between Disney and the union coalition representing workers in Florida. The world's biggest pork producer is warning of a potential shortfall of meat as the coronavirus shuts a major plant in the U.S. Smithfield is idling its facility in Sioux Falls, South Dakota, after employees were infected. And it says meat supplies across America are, quote, perilously close to the edge. Smithfield is owned by Hong Kong-listed WH Group. The 3,700 workers will receive pay for these 2 weeks.
Let's get a quick look at how markets are trading at the moment. It is really, in terms of the loan markets that are trading in this Easter long weekend, we are seeing Japan's Nikkei 225 online as well as South Korea's Kospi. In terms of the Japanese yen, we're seeing some respite in the yen after what was a pretty hectic week yesterday. Volatility down as well as liquidity down in Japanese markets. We do, of course, have the Easter weekend shuttering markets in Australia, New Zealand, as well as Hong Kong. Thailand is also closed today for a public holiday. Oil remains really the top story when it comes to markets, in that reversal of the market sentiment in response to that long drawn out and finally a deal from OPEC Plus. Still not impressed when it comes to the fixation on the demand side of that story. We are also counting down to the open of markets in mainland China, of course, and of course it is a week where we get new homes numbers as well as domestic activity numbers and GDP. But let's talk through these money supply and credit numbers, the clearest signal yet of Beijing's increasingly forceful response to the economic malaise caused by the pandemic and lockdowns. David Ingles is in Hong Kong with us today and has the story and the analysis. Dave, these indicators often pretty tricky to read because there are so many measures of credit, from the very broad to the more targeted. So what out of the data dump really stands out to you?
That's a very good point to make, and I think what sets this set apart from most of the other months that we track is fairly consistent, almost across the board pickup in everything from your usual measures of the formal banking sector. You're also getting massive pickup in measures of shadow financing. Undisclosed bankers' acceptances, for example, is one of them as well. The other thing that also stood out here was a pickup in corporate bond issuance and also government bond issuance. So if you put those two things together, corporates and government, we're talking over $200 billion US. In fact, 240 if I'm just doing my math, 230 billion, just putting that into context as well. Total, 730 billion US social aggregate financing. So that's the number that puts everything together as well. Just one last note on the bank lending as well. It was also very broad-based. So typically, sometimes you see a rolling over of loans. That's a key theme. Another one would be short-term financing going up. For this set, it was broad-based, households and corporates, both short and long-term lending also picked up as well. So hopefully we'll see this show up in the numbers, but I'm guessing it's going to take a few months though.
David, so how does that impact the thinking on what China's economic recovery could look like?
That's a very good question, because I've yet to see anything that indicates that because of this we get a V-shaped recovery. In fact, Bloomberg Economics suggests a V-shaped credit surge doesn't mean a V-shaped recovery. And a lot of that has to do with the fact that if it was only a Chinese problem, a domestic issue as well, that probably will spell a V-shaped recovery. But then again, you also have a global recession to contend with. And just the hole itself that kind of has to dig itself out of. We'll get perhaps the best indication on Friday, if you believe the numbers, that is, of course. GDP numbers are out. So the year-on-year estimate is negative 6% contraction. The quarter-on-quarter estimate, so the best one, you can't see me doing it because I'm doing it over the phone, in quotation marks, is negative 5%. The worst forecast is negative 20% out of Capital Economics. The median forecast is 11.2% contraction. That comes out on Friday as well. So I guess we start with that and we'll see how this progresses.
Yeah, historic numbers there. David Ingles, thank you very much for that. Let's get a quick check of how futures are trading at the moment. Of course, David just mentioned those GDP numbers. We could see later this week. Negative 6% year-on-year could be the number for first quarter GDP numbers out of China. FTSE China A50 futures closing and down 0.3%. A little bit of pressure across markets as we see TAIEX futures also down 0.6%. U.S. futures reversing earlier gains that we saw after U.S. stocks posted the biggest weekly gain since 1974. Remember, the S&P 500 closed at the highest level in almost 4 weeks, and we did get that historic OPEC Plus production cut, but the gains really not sustained across the board across Asia. We're talking about futures to the downside. Nikkei also down more than 1%. The Kospi as well under pressure and really coming down from highs that we haven't seen in a few weeks for both the Kospi and the Nikkei. We do have some closed markets as well. Australia, New Zealand closed, Hong Kong, Thailand away on holiday. So when it comes to volumes across Asia, pretty muted in this Monday. Coming up on Bloomberg Markets, China Open, Econosis Advisory CEO Andrew Freires, plus Qinmin Ventures founding managing partner joining us after the start of trade on the mainland. Plus, a look at the challenges facing India's auto sector with Maruti Suzuki's chairman. That's at 11:30 a.m. if you're watching in Hong Kong. That's it from Daybreak Asia. Bloomberg Markets China Open is next. This is Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investment with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Who shaped my views were the women I talked to.
I think Facebook's how we won in a lot of ways.
Running Microsoft was a ton of fun, and it was, kind of inspirational.
This is your weekly review of the most important business news and interviews from Bloomberg Television around the world.
9 a.m. in Beijing, Shanghai, and Singapore. Welcome to Bloomberg Markets China Open. I'm Selena Wang.
And I'm Rashad Salamat as we count you down to the start of the trading day in the Chinese mainland. Hong Kong is shut today. Stocks starting the week on the back foot. Investors awaiting earnings season, all amid the coronavirus uncertainty. U.S. futures declining in early Asian trading.
OPEC and its allies finally agree on new oil curbs, but the market isn't that impressed. Crude moves higher in a volatile session as traders fear the deal won't solve underlying problems.
And Hong Kong ramping up its fiscal response to the pandemic, closing in on the stimulus announced in Singapore. We're going to have a look at how the two programs compare.
Well, it's great to be back. It's great to be back in the studio here in Beijing, where the city is slowly coming back to normalcy. Some students are set to return to school as early as the end of this month. And of course, China still remains on high alert. You have those border cities now increasing those health checks in Russia because of new sources of imported infections for China. Rish.
Yeah, also we had Harbin actually extending its and deepening its quarantine there and its lockdown. Just taking a look at what else is going on at the moment, because it is now turned into an American epidemic as well here, with it being the hardest hit in terms of the number of deaths taking place here. Let's have a look at what's happening. Singapore market just coming on board. The STI is still trying to make it off by 0.5%, Singapore, Malaysia and Taipei. Just looking ahead to the start of the session there in China as well. FTSE futures on the A50 there looking 0.3% lower. So we're looking for a little bit of a downward move here as well. But one of the biggest bits of price action, of course, coming through with regards to what's going on with oil. That's currently what we are looking at as OPEC Plus came out with that agreement to cut 10 million barrels a day. Saw oil prices ratchet much higher. They did give up a lot of their gains, and OSC's moving back to the upside here as well, with WTI 7.8% to the upside. That's where we are at the moment with the oil price. Mexico one, which was the standout, was not actually going to be playing ball with what the Saudis wanted. They wanted 400,000. They gave 100,000 cut, and that sort of got the deal through as well. So OPEC Plus there coming in to support the market. All right, well, let's move things along. Let's have a look at what's going on with the First Word News headlines. Karina Mitchell now joins us.
Hey, Rashad, here in the U.S., we're entering a new week with the highest number of coronavirus deaths in the world, but with the administration still hoping to ease lockdown restrictions by May. Fatalities of about 20,000 surpass those of Italy and make the U.S. the epicenter of the infection. The top White House virus aide, Anthony Fauci, says infection levels are stabilizing, however, and part of the U.S. may be ready to reopen in the next month. The IMF and the World Bank hold their spring meetings this week using digital remote software as the coronavirus rules out face-to-face talks. The global lenders will face a new reality of shuttered economies, collapsing trade, and mounting unemployment. Officials have already said the world economy is suffering its worst recession since the 1930s, with upcoming data set to reinforce the gloom. Meanwhile, India is set to extend its current 21-day nationwide virus lockdown through the end of the month to allow more time to evaluate the spread of the infection. Prime Minister Narendra Modi says the government has adequate supplies of medicine and protective gear for frontline workers, adding that the next 4 weeks will be critical. Modi has described the virus as, quote, a social emergency. And senior government officials in Hong Kong are facing a pay cut, with the money going to charity and to top up the administration's cash reserves. Last week, Chief Executive Carrie Lam announced new stimulus worth almost $18 billion to support Hong Kong's slumping economy. The additional spending accounts for almost 10% of the city's GDP and almost doubles its projected budget deficit. And Indonesia is tightening restrictions on cities around Jakarta as infections in the country top 4,000. The Philippines says it's ready to act again to support the economy in what BSP Governor Ben Diokno says is, quote, a once-in-a-lifetime crisis. And Myanmar says the pandemic has halted plans to further open its stock market. There were hopes of attracting foreign investment, but the virus has been seeing expats fleeing. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Rich?
All right, thank you, Karina. Let's have a look at the oil price now. That's also we're talking about that historic deal reached by OPEC Plus. We saw the oil price ratchet up, then we saw it fall, and in the session here now, seeing gains, good gains here right now at the moment. We're seeing the New York crude price. There we go, WTI of nearly 7%, Brent nearly 5% up as well. Asia, really at the moment, the Asian session there reflecting gains after what we saw with that agreement coming through.
Yeah, that's right, Rish. It was an unprecedented deal, but perhaps not quite enough to boost the markets. And still ahead on Bloomberg Markets China Open, we get the market outlook with Ecognosis Advisor CEO Andrew Ferris. Plus, Qiming Ventures founding managing partner joins later this hour with his views on the VC landscape. This is Bloomberg.
You're back with Bloomberg Markets. China Open just a few minutes away from the start of the trading day on the Chinese mainland. Hong Kong markets are closed for the Easter Monday holiday.
Here in Beijing, they have announced plans to reopen schools to some students. That's even as quarantine measures are tightened near the Russian border after a surge in imported cases. Our markets co-anchor Tom McKenzie is on the line from Beijing. So, Tom, tell us more about what exactly is happening in China.
Well, Celine, as you said, it's the focus on these imported cases that has really got officials ramping up the restrictions in some areas. And we've seen the latest numbers that have come out this morning reported for April the 12th. So China's saying they have 108 new cases as of April the 12th, 98 of those from abroad and 61 asymptomatic cases. And over the weekend alone, we saw a single flight from Russia to Shanghai, and on board were 51 confirmed